Dr. Johan Bastin, can you please tell me some of the challenges and opportunities for private equity in Southeast Asia?
I think we first should look at what happened with private equity globally after the global financial crisis and how that has changed the landscape. I think what it has done, it has changed the fundraising environment in the sense that LPs have become much more discriminating. It has changed to a certain extent the GP landscape. Those GPs that have shown during the financial crisis that they also can manage a fund in a downside cycle and not just in the downside parts of the cycle, not just in a booming economy, certainly have a big advantage. Terms and conditions have changed a lot. In general, as we all know, LPs have retrenched. Fundraising dropped by over 55% globally. If you look what happened then in Asia and Southeast Asia, Asia as a whole followed the global trend in the sense that fundraising in Asia as a whole dropped as well. But if you look into Southeast Asia, it stayed pretty much flat. It was very low before the crisis and during the crisis and has picked up slightly after the crisis. So I think the crisis has changed the conditions under which funds can be raised and the conditions under which GPs can work, but also it has impacted on strategies.
And what role, given Asia's booming economy, what role would private equity play in Southeast Asia moving forward?
Well, it depends on how you define Southeast Asia. If you take the ASEAN countries and you include Singapore, in the past 5 years, Singapore has accounted for about 50% of private equity investments in the region. So if you take that out, then Southeast Asia is roughly at around 8% of total private equity investments in Asia as a whole. That's relatively small compared to 33% China, 14% in India. So it is relatively small. But I think what has changed in recent years is that on the back of Indonesia, the interest that investors have in Indonesia, Southeast Asia has come more into focus.
And given Indonesia's high profile in the private equity landscape, what sectors in Indonesia do you think would be the most attractive for investors?
Yeah. Let me take first one step back, and that is the attractiveness of Indonesia. I mean, I've lived 8 years in Indonesia. I've been following Indonesia for over 25 years closely. Indonesia has had many falls dawns. I always jokingly say it is the oldest promising young kid on the block. It resembles a lot like Brazil. Has had decades of promises and never fulfilled its promises. Now Brazil finally managed to get where it should be in the last decade, and indications are that Indonesia may be getting there as well. So let's all keep fingers crossed and hope that the government does get it right, and that for this time it is real. Assuming that this is going to happen, there are traditional sectors that in emerging markets that everybody's looking at, fast-moving consumer goods, branded goods, specific sectors of industrial production. But I think in Indonesia, what's particularly important is the infrastructure side, and within the infrastructure side, the energy power supply is very important in Indonesia, simply because Indonesia, at its current growth rate, will be stopped in its tracks due to lack of generation capacity. And I think the government has now accepted that there's no solution to the infrastructure problem without involving the private sector. So they're implementing active policies. I mean, Indonesia has been telling the world for 2 decades now that they like to see private money into infrastructure, but they didn't have developed the tools to do so. I think they are now starting to think about how they would need to develop those tools, and in some areas already happening. Then other sectors that are typically very important in emerging markets are those sectors that leverage on the growing wealth of increasing middle classes, and that's education, healthcare, so social infrastructure. As people get more wealthy, they're willing to pay more for healthcare and education, and turn often to the private sector because the public sector can't afford the quality of services that they expect. Other sectors, I mentioned already branded goods. It's the usual suspects in emerging markets. Anything that sells to middle class is of interest. Packaged food is going to become food processing. Packaged food is certainly going to be very important. I worked in other emerging and converging markets, and there's always a cycle that you can see. You're moving to, for instance, in staple food, people who have been eating rice for generations certainly start eating bread, and you see that shift already happening in Indonesia as well, where bread consumption has gone up tremendously. So there may be room at some point for packaged bread, etc. Just to give an example.
And what about other economies in Southeast Asia, such as Vietnam? I mean, the Philippines is always dependent on remittance money instead of the economy itself.
Correct.
And even Malaysia, who should be contributing more to the ASEAN economy than it actually is.
Yes, I think you gave the answer yourself. The economies that we like, where we see our biggest markets, besides Indonesia, is Vietnam and Thailand. Vietnam is a bit of a similar story of Indonesia. It had really falls down in 2006-07, where markets were throwing money at Vietnam, and I think they're licking their wounds. Having said that, the fundamentals are there. It's a big country, large population, young population. It's industrious. They're determined to succeed. They still have macroeconomic problems. It probably needs a couple of more rounds of dong depreciation in order to get to a level where you could confidently invest as an equity investor in Vietnam. A market that we like, particularly in infrastructure, because we're an infrastructure fund manager, is Thailand. Thailand has a very good legal and regulatory framework in place. It's a stable country. It has a good off-taker in the power sector. So it's a country we like a lot, and we can see from what's happening in the power sector that the economy as a whole is doing well. It has, of course, had its deal of problems, political problems, but when I talk to LPs investors and they say, well, isn't Thailand a dangerous place to go? And I say, well, what about Greece? Malaysia, I trod on thin ice here. Malaysia has always been the leader in Southeast Asia, far ahead of the other economies, and it seems that in many respects it is still steeped in that thinking. So it is not taking the measures that it should be taking in order to move out of its middle income bracket. The economy needs to be opened up, truly opened up for foreign direct investments. The many sectors that are protected in one way or another. At the same time, it's a very mature market, it's a very local market, so you're competing with local people who often have a different knowledge base than you have coming from the outside. So Malaysia should have a lot of promises, but it's not necessarily fulfilling them.
And finally, where do you see private equity? How do you see private equity in ASEAN evolving going forward? Do you think there is room for much growth, and what sort of untapped opportunities that the market has now will we see going in the next 2 or 3 years?
Yeah, I mean it's a question of demand and supply. I mean, is it the deal flow to sustain a blooming private equity industry? Yes, I think so. I think a number of things will happen. Simply economic growth will require more capital, risk-bearing capital. You will see also intergenerational changes, so traditional family offices may open up more to participating investors so that they don't try to hug deals by themselves. On the supply side, the investor side, the LP side, I think what's happening is that there's been a certain saturation with China and India. A lot of capital has flown into funds that are focusing mainly or solely on these markets. And my feeling from marketing our next fund is that LPs say, well, you know, we want to see how our money is being put to work in China and India. Also, China, don't forget, there's an awful lot of India, same, a lot of local capital competing with foreign capital. So I think those investors who like Asia, and many of them do, those who like emerging Asia, are now looking with more interest to Southeast Asia. So and there's much more openness, open-mindedness to look at this closely and to hear what we have to tell about Southeast Asia.
On the topic of foreign investors and China and India, do you think that these foreign investors, if they come to Southeast Asia, they would find the market is one thing cheaper and also has less competition compared to China and India?
Yeah, I think it's cheaper, but we're talking about a very marginal equilibrium here. I think if there's just a bit more capital flowing in, you know, prices will go up, because the deal flow is growing, but not so much so that it could absorb, you know, a lot of new capital without having higher asset prices.
Thank you very much, JohanBastin.
You're welcome. Thank you.